All right, welcome everyone to our to today's War Room. My name is Jose Ricardo Tejaen. I'm one of the team leaders at Insider Report, and today the idea is to have the opportunity to share with every one of you the step-by-step, what I call the play-by-play, in how we go over reviewing different stocks, the analysis, what we take in consideration before we publish any recommendations. And I just want to share with you exactly how we do this, because I do believe that there are some opportunities that they just don't make the cut. You see, one of the things that happen that takes place when we get together and we discuss, we connect and work in these calls as far as what's going to happen, it's understanding that Ross Givens is very selective. So before we put out a recommendation, we review everything, we go over due diligence. We're really thorough in understanding what's going to take place. And still with that, there are some situations that probably they're not going to be as profitable as we expected. Some we won't make money, some we break even, and some, simple as it is, we just get stop loss. That's what it is. It's not a surprise. We are in the business of making money, and we won't win every day, but we look to position ourselves in double-digit scenarios. That's what we do. And we get there by following company insiders. There's no secret. We have been explaining this, been learning, working side by side with Ross Givens for the last 2 years, and up to this point, we haven't found anything that gives us the edge in the markets. And we're not talking about technical analysis or fundamental analysis. Technical analysis, oscillators, different techniques on the charts. All that is good as long as you know the three questions that we always have. Number one, who is buying? Who is in that company? Are you just drawing lines in the monthly chart just because, or are you following a valid strategy over time? That's what we do. We follow insiders. We know that on different papers, studies, after 975 plus 970 trades, they didn't lose one. So you have to wonder yourself, why is that? Why exactly is that? Now the second thing is, how much is he or she buying? Because let's say, for example, that suddenly you have a director working for Amazon. He's part of the board of directors of Amazon, and he buys 2 shares of Amazon. Does that sound to you that he has a commitment to the stock of the company? Well, of course not. 2 shares of Amazon. That's for only $4,000. That means nothing. So we're looking for high commitment, high conviction trades. The third question is when, and this is exactly why I want to look at this. Now, when you look at the when, is a common purchase? Is this a common thing that the insider does all the time? Like, for example, in the U.S., for our audience in United Kingdom, Singapore, and other countries, it all depends if you have the same structure. In the US, I think it's similar in the UK. You do have the 401k, and there's a similar plan in the UK for retirement, where your employer, basically, let's say I put $10, my employer will match that, or would allocate some funds. So we want to look into that. And based on that, if you have a 401k and you are buying, what some insiders do is that every January they buy a couple thousand shares, and it goes directly to their 401k. That's what they do. Is that what we're looking at? Or are we looking at a rare buy? A buy that does not match previous purchases. There is a disruption in the pattern. We have to analyze that. We always have to question ourselves. Why are they doing that right now? That comes with the when. So, having said that, all these things will lead us to what on a daily basis we understand. Now, if you're now part of the War Room, I welcome you again. And I cannot stress enough, you have made the right decision. Not only because you're already part of Insider Report and now you're looking to specialize yourself, you're learning, and you want to go deep. You want to dig inside the strategy and learn as much as you can to be proficient. And we'll lead you to know about other opportunities and how I find those, and probably to see why they don't make the cut. It doesn't mean that you cannot make money, and a lot of money, but what it means is that if you're willing to take the risk, those opportunities are available. Does that sound something that you want to pursue? Great. Now, we're going to meet every Wednesday at 1 p.m. Eastern Standard Time. However, I'm proud to say that we are giving an opportunity to new ideas, and we are building a Telegram chat room as well. The Telegram channel has been an idea that we discussed with our VP of Communication, Dan Klein, also our CEO, Dustin Pass. And what we want to do is to build a community. We want to reach out to as many people as possible. Not only initially, and we made this clear, this is an opportunity that goes directly to members only of the Insider Report. So if you're a member, you have the opportunity first, and probably for the time being, to be part of this war room. And I'm glad you're taking the opportunity, the chance to keep growing. But we want to build this community. We want to make sure we are not doing this just for the selling of the subscription. This is not what we're here. We're here because we want you to be successful. This is the first thing day one when I interviewed with Ross Givens. You're here to learn from me so you're successful and you can help others to be successful. That's all it is. You must perform, Jose. That's it. That's the name of the game for you. You're not here to talk. Yeah, you articulated. I was like, thank you. Yeah, whatever. But it's not enough. You need to deliver ideas that make it to your goal. And your goal is to build up accounts, help others to build their accounts, and reduce their risk. That's all it is. Okay. So also make sure you sign up yourself and join our War Room Telegram. There's opportunity for you to exchange idea with other members all the time. I cannot promise you that I will be 24/7. What I do promise you is that I will check all the messages, and as soon as I need to step in, I will do that. And from time to time, I will be there, and you can communicate directly with me. Always send me a message. You have 2 emails that you can use to contact me. First email, info@marketstradersdaily.com. You also have your customer service email well, actually 3 emails. You have the customer service email to communicate directly with Ross Givens. The team, we take a look at it all the time. And if you have any questions about the War Room, please direct your inquiries to myself, Jose, Jose, at markettradersdaily.com. There's no excuses. Open communication at all time. Great. So we have the Telegram. We have our trade room, war room, every Wednesday, 1 p.m. Eastern Standard Time. No delays. And if you have any questions before that, always communicate with me. Having said that, let's begin, guys. So you got the tools, all of you that subscribe to your masterclass, you have access to Open Insider, and also we're not paying your subscription to Guru Focus, where we find everything. Today I'm just going to work on Open Insider. I think I have plenty to go over during the first session of the War Room. And what I want to do is make sure you understand the process. This is easy. It's easy. There's no complications. This is my setup. I go for last 1 week in filing date, all dates. Transaction, it's purchase only. Then we have insider title. I look for CEO, president, COO, CFO. I can always add 10%, play with it. We'll do that at a later stage. And I 100 max results, and then I click search. This is what we have for this week. I think it's week number 21, week number 2021 of the year 2019. And these are the different opportunities. You can see all of them. Let me see if I can have them. There you go. Well, XON is available twice, so you have it there. Now look what I do, what Jose does on daily basis, and I do this 3 times a day. Before the European session begins, when it ends, and at the beginning, at midterm, midday of the North American session. That's it. Sometimes I play around with it at night just to see what's going on, if there's something new that pop-ups, but experience tells me it doesn't. Now, first, I look for the own percentage. This indicates the change between what the insider previously had and the purchase. So for example, if you're looking at me, I don't even have to look at what is the name of the company. It could be Amazon, it could be Apple. If here reads 1%, it means nothing. There's no really a commitment. There's no high conviction coming from the insider in a way that I will say, stop, pay attention, look at this. It doesn't exist. So I'm not doing that. Okay? Now, this 13% caught my attention. We have this 285%. I'm looking at it now. New. This is the rare buy. I want to take a look at this. We have plus 107%. That's one. 59%. That's two. 66. That's another one. We have this one for 25%, 68%, 70%. Plus 176 also, and you have one for 89. Now, those are the ones plus 10% that I have to evaluate what is happening there. But those are the ones that I'm looking at. Now, if you take a look at the one that is new, okay, this one is a rare buy. Why is a new buy? Why they're buying for the first time? This is a first-time buyer. I want to take a look at it. So write it down. New, if you see new, it's important. It's relevant, so you have to go for it. At least take a deep look. Dig in. Do your research. Due diligence. That's what we want to do. Okay? That's how we're going to be successful. Because once it's in the media, we're toast. There's nothing there for us. So we have to play before it happens. Now, there's two here. For example, these are the same company. Now I can see there's two the same company, BG Bench Limited. You have the CEO, wow. And you have Brian, you have a president of global risk management. That's something. And 6870. So together, both insiders, they're adding, wow, that's 138% more of what they had. That's something to think about, okay? So those are the ones that I want to take a look. And there's one more I wanted to share with the group today. Okay, great. I want to take a look at this. GVP, 25%, mainly because it's the CEO, Justin Kai Ludermilk, that he's posting this 25. So we have to look into this. Now, see that, and this is a discussion we had all the time at when we get together, all the analysts working with Ross Givens. For example, this one is it's a penny stock. It's below $5, below $10. But if you take a look at BG, we're looking at companies in double digits, $51 when the insiders made the purchase. And the other one, the new one, this is a $61 company, double-digit company, way above the $10 mark, and it's the CEO. So I want to write those notes. Let me just write those notes for all of us. We're going to take a look at 3 companies during this session. CTSH, it's a new buy from the CEO. Okay, then we have GVP. We have the CEO plus 22% apparently, and then we have BG. 2 insiders. That's also important. It's not only one. I mean, the more insiders, the better. That it's signaling that there's something changing in the company, not only fundamentally, but as far as something positive might take place around the corner. 2 insiders buying more than 138%. So we have those 3 companies, and we'll take a look. Now, as I said, let's quick recap. Now, I take a look. I don't mind what's the name of the company symbol. I don't care. You don't have to care. You don't have to pay attention to that. What you're looking here, you're looking at a structural change that makes you think there's a disruption, there's something about to happen around the corner for this company. And that goes linked to high conviction and high commitment. That's what we're looking. That's what you need. There's no guessing. So if you're buying 1%, it can be $23 million, but that represents 1%, it means nothing. Because also keep in mind, that company can be diluted. And that's bad for you, bad for me. And that's actually bad for everyone. You don't want to be part of that game. But if you suddenly look new, bingo, this is a rare buy. And what? The CEO? New buy? Right there is a new buy. And it's a new buy for $1 million. Keep in mind, I don't have right in my mind right now, I don't know by heart the average compensation of CEOs in the US. It's pretty high. But these companies usually are somewhere around $250,000 to $1 million. So and that's a combined compensation. That's not base pay. Base pay is usually, it's not bad if you're taking home $360,000. Okay, so telling me you're risking, and this is skin in the game, because this is direct purchase. We don't have any changes here. You have it here, okay, in this area. It's a direct purchase. You're risking 3 times your base pay. That's something to consider. Now, so once we have this fundamental view from the perspective of the insiders, I'm not talking fundamental view based on earnings per share, revenue, net income. No, it's a different view. Now, I'm just gonna jump to my charts and start working. I already have the chart for BG, and then I will have the charts for, let me just bring those up, CTSH. And my tool right now, my free tool that I'm using for charting is TradingView. Feel free to use anything provided by your brokers in the US. I can mention a few names: E-Trade, Ameritrade, Schwab's. Also in the UK, in Singapore, in other countries that we have clients: Sweden, Norway, Finland, Denmark, Japan, Hong Kong, Taiwan. Those are the ones that I know that I had communication. So feel free to use their platform. Also, clients, I know clients have been using, and they're increasing the use of Saxa Bank multi-asset trading platform. It's beautiful because they have access to more than 12, probably 20 equity exchanges around the globe, and that's available in Europe for our Europe members. Now, as soon as I go to TradingView, what I do is I start following the company. Let me just double check. I got the CTSH. I got it. Perfect. And once I do that, I open full feature chart. And now I also want to have GVP, GSE Systems. Great. I'm just going to have that there. And once I have these, again, I want to welcome you to the War Room. If you're just joining now, please, or if you're just watching this in the archives, please, I want to make sure you feel welcome. Remember, you have a way to communicate, not only in the chat in this members only area, but also you have the opportunity to join the Telegram. I'm there, and let me see. Well, it's not the. Let me see. That's me. In the Port of Grush, you cannot see it's the Port of Grush in Dubrovnik, but that's where I live. And you can communicate with me directly. Now it's gonna open. Great. That's me. There you go. There's no message. I'm not gonna message myself. But take the opportunity, because also I will be sharing some ideas, timing ideas. Timing, it's key, everyone. Guys, ladies and gentlemen, timing, it's important, especially when we do speculate in the space of options. And this is something I will discuss at the end, so please stay until the end, because we have a lot to discuss during this first session of the War Room by the Insider Report. So make sure, please, that you subscribe to our Telegram. I'm on the mission to build a community. I want to reach out to everyone because we do believe in our product and we do believe in performance. So, having said that, again, let's continue. We have the Telegram group, and now we have all the different companies that I want to start reviewing. Just open the full feature chart for GVP. Okay, let me close this. It's marketing. Just delete this section. And you see I have different technical software, included technology that I want to use. And now what I want to do is take a look at this company. We know it's a fact now that insiders are in the company. So now, and these are positions that matter. So now we want to take a look at as far as how we measure our risk. Now it comes to technical, how we measure risk. And how exactly I'm going to use this. If you have, I see you have a couple questions. If you have any questions, feel free. Please, you're not interrupting. Share that question with the audience. Now, if something is a private matter, please just communicate with me as the panelist. We're using the Zoom software, and it's easy to communicate. If you don't, if there's a problem with the sound, let me know that in advance. If you cannot see my screen, please let me know that as well. Okay? So, we have this information. We're going to start with GVP, GSE system, ticker symbol, again, GVP. We detected, and based to our search in Open Insider, we detected, here we are, GVP, the CEO, Kyle Justin Ludermilk, has a plus 25%. That's interesting. That's something that caught my attention because he's risking, like I said, CEOs in these companies that we have. It's not a big company, and especially if it's trading below the $10. In this case, I will say his base pay is somewhere between $250,000 pre-tax, up to way. We push it if we say $400,000. And we can do a full due diligence on that. There are a couple of websites where you can verify this information. Always conduct a due diligence. Don't play with your money. So we jump into this, and I'm going to take a look now at levels and strategies that I use to measure my risk before I decide to go in any company. Now, what I do, I always look at weekly and monthly chart. I'm going to work on the monthly just to give you an idea. I have a few levels. Let me just take out. And the first thing is in 2016, I'm looking for levels. With this technical tool, the Hawkeye Trader, I'm looking at volume and I'm looking also at levels, stop levels, buy levels. Now, I'm looking at 195. This is a level has been on the weekly chart. It goes all the way to November 2015. Now, I want to take a look also at the monthly. Where are we in the monthly? And I can see prices somewhere around 288 as a high. Then I look here, this level is selling 90 cents, extremely low. But somewhere here, somewhere in May 2004, I'm around 137. It's very deep. So I'm going to zoom in, go in a little bit more. I have this level sometime December 2014, $1.17. This is the level that caught my attention, 131. Let me see what we have from 131. I have a 64%. That's exactly too much. So this area, I have it right here, and I can see this is an important level that is where we have massive purchases back in 2006, and then after that you can see how prices went up all the way. That's something that we need to consider, absolutely to consider. See this area here? Okay, great. So do you see it? Perfect. See this accumulation pretty much sideways for the price, and then here we go all the way up. It's in consideration with the high trader volume, and you can see the accumulation after selling. There is professional buying, and then here it goes all the way for 472. But before that, in this case, we'll have a turbo resistance around 386 and $3.14. Is something to consider. So with this area and all this extension, what I will do is take my risk. I will take a position, go with a long position, and consider my options. I'm gonna take, if you look all the way, it seems to be a 15.38%, measuring all the way to the left. The resistance can be in this area, 294 short term. That will be a 33%, 30%, and then to the extension, all the way high will be a 73% opportunity. Now, this is how we do it. We look into historical levels. You need to look for historical levels. This is not a traditional or common 1 hour, 4 hour chart support resistance. You look into specific levels where something happened, where the smart money is telling you that something happened. In this case, of course, I need to combine and looking at shift in volume that indicates that buyers were serious as well. We know that the insider, in this case the CEO, he's serious, he's heavily committed to the company, adding more than 25%. I can look into more details. Let me look at one more detail, because I think it's important to see where we right now. Let's see what information Open Insider has that I can work with. Because the other factor is also considering, if he's adding 25%, I want to know when was his last purchase. When was the last time he had a cluster in this company? So you click on the stock or on the name of the insider. Let's click one more time, see if we can get this information directly. If not, we can always go to Guru Focus and do a little bit more of the due diligence. Okay. Well, since we don't have it, let me click on see if going by the ticker. Here we go. Now, all I have, I'm just gonna let me work with this. All I have, and you then will do the practice in the next two. I will do the risk scenario, the visualization of the risk based on the tools I use, and then you will do the exercise of a little bit more due diligence, so you can pinpoint, find that evidence that tells you that yes, this is actually a very rare buy. It's disrupting a previous pattern. We need to know that. Now, let's see. It's something that caught my attention right away. 2017, there are a couple of two sales, but the last purchase is by the EVP in June 2017. So look at these sales, 4,000, okay, happening at $3, not too far from where we are, $1.40. And look at this. The last purchase was only 5,000 shares. And suddenly, the CEO, the big man, the big boss, he's adding 100,000 shares. Wow. Wow, look at that, guys. Not joking. This is where I'm like, there's something. Absolutely, there's something. And is the first, only judging based on the information I have from Open Insider. It's a serious purchase since 2017, June. That's almost 2 years. And it's a big purchase. So do you want to consider this as an opportunity? Serious opportunity. So I'm going back to the charts, and this is what I'm looking at. Based on this, I share already all the way back to January, this area, January 2006, where prices went sideways, then went explosive to the upside. We have this area, and something tells me that we can take a 15%. You can take a 15% risk haircut in your capital. That's for every $10,000, you will expose $1,500. My preference, I repeat, my view is that when I take these positions, I want to go for a 25%. That's my view. Now, see that based on the Hawkeye Trader, and no worries, I can provide this information. I will provide this information for members only of the War Room by Inside Report. You come and I will share this with you. What I'm looking, these are professional tools that hedge funds are applying all the time. We look at the volume, we look at where the stops are located. So if that's the case, what I'm looking here is that somewhere 160, 170, those are the stop losses. So I want to play around that area, 25%. And of course, sellers, if we are in the presence of sellers will need to push the stock all the way below the $2 mark, which is, remember, flow level The 0 is a psychological level that we must consider. Now, this is the case. I'll play with 25%, and for every one of you, you have different levels. You can set, use a conservative target to the upside around the $3 mark, another round figure, and another case will go to a long-term resistance that has been set, play all the way between December 2015 and all the way to 2009. This is that the area region will be, you can look at it, the $3.50 to the $3.80, and that will give you a 73% return. Do we know if prices are heading that way? We don't know that. Nobody knows. But what we know, and this is how we actually, I think this is the reason why how we see this at Inside Report. If you measure your risk, you can make money in any asset class. That's it. The name of the game in financial markets is measuring risk. Because if you don't measure your risk, you can lose it all. But if you manage your risk, you can win everyone. You can win in everything because you will know how much you're willing to lose. And that's it. That's the name of the game. So we have this information. Now, one more tool I want to share. I'm going to remove this. You have that data 183 as your exit, conservative guys. If you want to expose more risk, have more risk, you basically will go with a 25. Again, my 25 might not be suitable for you. Please make sure, remember, I'm not a financial advisor. I'm a coach. I'm a trainer. I'm an analyst. That's what I do, and I try to educate myself and educate yourself with ideas in where to assess your risk. That's all I can do. Now, I'm going to do one more analysis. This is, I studied this for a couple of years, the Fibonacci. I totally agree with you. It sounds something that everyone uses, but not with the projections we use. So this is what I have, and my take is this. We have 37 and we have the 38. The 38%. In Fibonacci, there are two levels that matter the most. The 61.8% and the 38.2%. The 50 is okay. It's just in the middle. It's half of the retracement. But these are the levels that you really want to pay attention. So, when you want to pay attention to this is that if prices were to break, right now they're in a bearish channel. There's a channel. We study price rotation. Ross Gibbons, all of you have seen that he discusses all the time volume profile, which is nothing more than the rotation of the price based on the volume, the buy and sells of players and market participants. That's what it is. So we're in a bearish channel. It has been actually the price rotation since the 2000s. You can see this in the chart. And then if prices hit the resistance and break above, there's a new rotation. That new rotation can take the stock as high as $5. And also for another portion of my capital, based on applying trailing stops, that's where I want to go, because then from this area I will be looking at 140% estimated value, estimated target. That's where I'm looking. And that's how we use Fibonacci to give us an idea of a projection. When it gets there, then of course we evaluate and we take a risk. We measure a risk again, and that's what you see for GSE Systems, ticker symbol GVP. All right. If you have any questions, let me know. Going with the questions. Time frame. Okay, now, all of you're aware of the conditions that insiders, the restrictions. The SEC, they have regulations, and you must follow them as a company insider, as a C-level executive, 10% owner, director, and so and so. What happened is that they have the 6-month swing rule. So I look for between 6 to 12 months. I have also preference if I don't get stopped out or if my trailing stop is not activated. It means that I get out of the position by the trailing stop. I'm looking for a full 24 months, but it all depends. Initially, everything is set for us to play in a range of 6 to 12 months. And like I said, and I repeat, this is crucial. I don't look at any security in a lower time frame that is not monthly, weekly, and daily. That's where I work. That's where I think you should be working. But again, your profile might be different. We have a lot of. What happens is that we do have a lot of subscriber readers that they are using these. Also, they're trading these and investing via the retirement accounts everywhere. And we do have traders. We do have a few asset managers that are following our advice. It's a different structure for them, different pricing. But it all depends. I have no interest in anything in the short term. 4 weeks. Now we do have. I mean, there's tangible evidence that we do have some situations when we suggested the speculative for those that want to speculate via call options. Last year we have the AXI extender, 250% in 2 weeks. So imagine you don't have the opportunity to double your money. Last year you have one opportunity to triple your money, 2 times your money. And we also have the, I'm not mistaken, I can't remember the name of the company, but it was 50% on the options in a week or 2 weeks as well. So you have different positions that you can take advantage of. Now, let's continue. So, this is the idea that we have with GVP. The reason why we go in, insider, CEO, plus 25% more shares are previously owned. Now, let's move to BG. Is a company. So yeah, I think I answered your question for time duration on the trades. Now let's look at this company, BG, Bunch Limited. Now see that I'm not going deep into these discussions with sources like what is the company, what is not a company. I'm just looking at the value of the company based on the insider's activity. Okay. Now there's a company that I can see clearly in the weekly chart here. It's a company that is in the downtrend. Taking a look at the monthly to see where we are. I can also see that it's not too far from a historical low sometime in 2016. Not many years, but this low repeats 1, 2. So this is my value area of operation. If I look at this again, you see there's the price rotation, and the price rotation goes all the way from this is the area. And it comes all the way from 2005. And you can see the long-term stops, the second value at 39.74, price currently trading at 50.55 cents. So that tells you a lot. We have the stop losses set at this level. It's breaking down these previous stop losses. Apparently it's going to break down on next week, during next week trading sessions. 50.32 is 50.55. It gives you a lot of attention. So price has been rotating from high to low in a span of, wow, almost $39. That's a lot. So right now on the volume, there's professional selling coming in. Previously we had professional buying. This buying happened around the $61. So we have a $10 difference. Insiders were allocated in 2 tranches. As we discussed, more than 178%. Look at it again. Let's go back. Let's see. We can bring the search. There you go. BG. Here we go. 68% and 70%. And one of these high conviction, high commitment trades, the CEO of the company, Gregory A. Heckman, BG, Bunch Limited. Now, let's continue the analysis. And as you can see, this will be something drastic. If it breaks to the low, the next stop will be the $40. So that's another $10 drop. Let's see what kind of risk we're looking at if that happens. $40. I can live with that. $18. It's not the end of the world. Again, this is my view on the position. Might not be the same for you. Have it here, okay. $17. and lower than that we're looking at a 25. I choose to go with my 25, 26. See that I'm in this range of the 38. That's the range of the previous stop losses. We are going, I'm being transparent for information I see from the technical indicator. Very important to understand. We're looking at professional selling right now and a bearish trend, but prices held. One, we have this exception. 2, 3, 4. This could be the break and come and look at new base in this area. And if that's the case, we're looking with a estimated 21 to 25% as I prefer. Remember, this might not be the risk profile or the risk you're willing to take. And we're talking this level is a level valid for the last 13, probably 14 years. Just keep this in mind. So when I'm looking at the range, if it's a price recovery, we're looking all the way to $70 recovery. This is the middle of the range in the bullish rotation. This is a bullish rotation. If it keeps going down, I can also say that this is a bearish. We're in the middle of the bearish rotation happening here. Came all the way down to $46 and change. Rotate to the middle, make a little bit of another break to the upside. So that's something that you want to pay attention. So my risk into this position at 25%, and I'm looking to initially I'm looking in the conservative 11%. That's what is available, and then a continuation to the upside to a 41% return if prices can keep above. Remember, just getting into the middle of the price rotation, the bullish price rotation. So been rotating for the last again, yeah, it's been rotating since March 2005. Be rotating all the way from the $47 range all the way to the 92. It's 50. It's a lot, and this level here almost $30 and $32. Something to consider. This is my risk scenario all the way for BG Bunch Limited. We have 2 insiders adding more than 170% more shares. It's something that we have to consider, especially because we also have the CEO included in the group of insiders, and 2 insiders is better than 1. Effectively. At this point, do you guys have any questions? Any questions? So, okay, so take a look at this and keep in mind my risk profile as an analyst, the way I measure risk and I think about positions might not be suitable for you. At all time, we're not financial advisors. We do our best to measure the risk, but at the end of the day, you also have to know what is best for you. We will give some guidance as far as how we measure the risk and how we do that. Now, one more time, I want to take a look at these from the Fibonacci projections. We have the levels. So if that's the case, see, this one is tricky. Have this one. And there we go. This one happened a long time ago. So you can see this one has been playing between the 38. See the 38, and then we have this is probably 78 and change. It's flirting. It's on the edge. Now, if you were to reverse, we shouldn't discount 38 and 50. But again, 38 is the most important. So if that's the case, I'm looking at a reversal. Have this 31%, and then you have a 57%. So one of the things we always discuss when we meet all the analysts is this: listen, you cannot demand the stock more of what it has, or what it has done, what it has for you. So the 38, the 50 level, those are technical levels that tells you that something's happening. If it breaks, then we go to the 61, and that's 79. I don't see myself trading Bench Limited as far as a stock that will double my money. That's not what I see at this point in time. Now, what I could see now, if this is what is on the table, I want to explore, let me explore the options chain. That's where I want to see what's the action if you want to speculate. So I take the symbol, the ticker symbol BG, and see option chain. I'm going to use the free tools that I have, or tools that we use. They're not free, but as a reference. This is an easy one to follow. So you want to take a look at it, okay? Let's see, perfect. And now, when it comes to the option selections, you have to believe in timing. And I will show you. I'll show you my secret. I want to welcome you with open arms, and I want to show you exactly how I measure this and how I look to go for the kill, go for the jugular, like George Soros said in 1992 when they broke the Bank of England, which probably will happen again. He says to Druckenmiller, "Hey, go for the jugular." Actually, I think like Druckenmiller, hedge fund manager, retired. He couldn't keep up with the markets. Just because of the trends. Just, hey, go for it. Go for the jugular. To go for the jugular, you need timing. That's what it requires. So if we keep doing this, we keep learning, we keep working together, we can build it up. Timing matters. It's the difference between 10% and 250% in 2 weeks. Now, what we have to do is this. We never pick options that are too close to us. It's a waste of time. You need ones that are 5 to 6 months. Now, next week, it's almost June. So we have June, July, August, September, October, November. What do you see here? October. There's no November. So go with October. Let's go for it. And now, let's see. Prices are trading at 50. We said that at 60 we have a resistance. So we want to look for something around that. I don't have this. This is the challenge with the free, the non-paid solutions. I only have to 55. But learn to work with what you have. Okay? Learn to work with what you have. I repeat, if you do it that way, you work on your creativity. You have to expand your creativity. You have to go for it. Don't surrender to say, oh, I don't have these. Don't surrender of what you lack. Excel by working with what you have. That's what it is. So click October, click on the date. Yeah, working with the NASDAQ option chain. This is very important for you to have. And let's go look at it. Now, when I look at this structure of the option, I look again for price rotation. And the price rotation, what indicates is that the contract high has been $3.74 and the contract low was $1.70. Right now, the last sell price for this option, $1.95. Now, I look into the 3-month price rotation, and I can see right here, look at this. Someone already made close to 80%. He or she, I don't know. But I know I follow this. Now, it's in a downside trend, but then now we have the expectation if it reverses. Now, we also know what is our risk in the stock. The risk in the stock, if it break this area, it will come down to test this. Now, look at this. If you go all the way back since March 2004, there's where prices were high, 41.43. So if we take a look at 41.43 for where we are, you're looking at a 20% risk. So let's say prices in fact do trade next week lower, and you can capture prices at a 10% discount from where we are. Then in combination, this combination will give you an opportunity. This can easily go lower, probably to $1 or 80 cents, and then is your big kajun, your big wave opportunity to take this and ride it all the way back to the price when the price of the stock goes into stabilization mode. It has to reprice, and what it does is that the option itself will reprice, and if you reprice back all the way back, you can be looking at 100 to 200% estimated. There's a probability that happens if all things are aligned. Remember, trading options, those are speculative products, they're derivatives, and therefore the risk of loss is high. Never forget that. Okay? So that's my play. You have in front of you. Take your notes, ask me any questions, and keep that in mind. Also, when you go into your positions, make sure you don't go all in. Who goes all in, for the love of God? The other day we had this situation, and I was talking to a guy in Bavaria, in Munich, and he was saying, well, I can go with a portion of my capital. Yes. It's a different story. I will talk about it because it's a story I want to share because it tells you a lot about about management, risk management and money management. So he said, well, I can go with a portion of my capital and then see how it goes. Well, yeah, absolutely. That should be the way to go. So never go all in. Think about this for a second. Do you think if a hedge fund has a $10 million position that they have to fill in, that they just click the button buy and you buy $10 million? Guys, they don't do that. It's not how it works. In a span of a week, you fill up the position. You buy $1 million here in the morning, then you go buy $500,000. You set some orders. You talk to the trade desk. I have this. I need this to happen. These are prices. These are my prices. You compare the average of the day, and by the end of the week, you have your $10 million worth in XYZ security. That's how it works. That's how you have to do it. Okay? So keep that in mind. So if you have $5,000 and you want to speculate, you don't want to buy the position, the equity, you go $1,500. You buy a couple. Right now, you're paying per contract $195 plus commission. Let's say it costs you, let's give just a number, $200. Hey, take 10. Well, take 5. If it drops, you buy a little bit more. If it goes up, great, you make money. But you need to manage your risk. You need to manage your position. You need to manage your allocation. That's what you have to do. Okay? Very good. So now, the last position I want to take a look today with you guys, I will just go into the analysis based on just the charts. We're on the weekly. We have a massive drop. Look at this massive drop, and something that I see like this right away, I want to measure it, see what happened. The massive drop, we have a 20% massive drop. I bet something happened during the earnings season last 2 weeks. So it's 20%. So I'm buying this at 20% discount. See how prices were trading to the upside since 2017. Now let's take a look. I'm going to jump right away to the monthly chart. Look at that beautiful uptrend, still an uptrend. We don't need to be a genius, but what I will say is this: with these stop losses, I can be looking at a $43 range. This is something that it's to keep in mind. And then we have these massive professional selling. As we to the opposite, see this, and then the stop went up. Let's count this from this purchase. Stop went up 64%. Something that we have to watch out. We have this selling here as well. Stop drop. That's last time. You also have to look for historical levels. 72%. It's a little bit tricky with this position, and probably it will pass 25%. And the next level, if I want to take risk, I will only be willing to take 23%. Probably it's too much. I will only give this position CTSH. I repeat, ticker symbol CTSH. I will only give this position another probably 25% risk to play with. So that's something to consider. Okay, have this in this area, and that's how we'll give it to it. Because what it's doing right now, also if I take a trend line now, thinking about this, it's breaking to the upside, and that will land again. If you take another trend line, key value, this is my key value, goes all the way to April 2011. 7-8 years in the making, and this is where I have to play. It will be still somehow will be bullish, but in a secondary bullish level, if you want to think about this. And if it breaks, well, we want to exit. That will be our exit strategy. And my high then will be to the upside. It's very tricky, this particular one. This professional buying. With the last professional buying, it went up 82%. We have buying this section, just counting historical levels, 100%, 52%. So we have insiders in, and those purchases should reflect soon. So something I will have to review next week. This will be a no to me, no to go right now. There's only too much risk. I think I can probably get this position 20% cheaper at that point in time. Then I will be playing with this level of stop losses, $24, and then the company will be even more attractive to me, and something like that will make sense, and then I can see where I can get out of my money 100+% in this. Right now, it's a little bit too much. I don't want to do it. See the risk. If you want to go in still based on insiders, I will say you have another 20% to go. I will play with my 25%, but just remember, it's my 20%, 25% is my perspective. It's the risk I will take on this position. You don't have to do it, okay? Keep that in mind. Once again, guys, I want to invite you, everyone. We have reviewed 3 companies. Next War Room session, we'll definitely hit Open Insider, Guru Focus, and other tools, free tools. Today, I give you the exact play-by-play that I follow with our team of analysts and Ross Givens, senior editor at the Insider Report. Once again, I want to invite you to join our Telegram channel, where I will be sharing ideas, active ideas that we get directly when insiders signal a buying opportunity. This is something that we want to pay attention. So keep this in mind. So now we just open, give you the opportunity to go ahead and share comments, ideas, and let us know. We're just starting. This is the first. We are receiving more subscriptions, so the group is building up. Every Wednesday, 1 p.m. Eastern Standard Time. Okay, the question about time. Whenever you enter a position, listen, whenever you enter a position, I'm playing with a 6 to 12-month time frame. That's what I'm looking at. This is what that's my interest. I don't want to play with anything that is not at that level. Does that make sense? Excellent. That's what I'm looking at. So that's where you should be looking at. There's no reason for you to initiate a position unless you're planning at a 6%, especially with the common shares. If you're looking for the call options, you're speculating. So this, if the stock reverses, if you're in an uptrend, this can easily in only 2 weeks, as we have seen before, take home 250%. This year on the option, for those actively speculating, Ross giving close 2 positions on Flex, FLEX, and FedEx, 200% and 250%. It took 4 or 6 weeks to happen. So you're basically taking $50,000 into $100,000 and more, or $10,000 into $20,000, $5,000 into $10,000. Imagine what an extra $5,000 would do for you this year, pre-tax. Pre-tax, remember that, pre-tax. Okay, great, wonderful, guys. So I want to thank you all. It's great to have you in the War Room. Telegram available 24/7. Communicate. Let's build this community. Again, my name is Jose Ricardo Tejan. I'm team leader, analyst, and Insider Report. I will be with you every Wednesday, 1 p.m. Eastern Standard Time, discussing what we think based on facts, tangible evidence. It's Wall Street #1 leading indicator in the markets, the insiders. Thank you all for being during this first session, and I'll see you next week.